The UK budget, it's looming, and you know what happens when the budget's coming up. Everyone, and I mean everyone, is buzzing about potential tax changes. It's like this collective holding of breath, wondering what's going to happen to our wallets. Well, today we are diving deep into one area in particular that's causing a lot of anxiety: capital gains tax.
And it's interesting, right, because it's not just those big headline-grabbing things you always hear about with capital gains tax, like, oh, someone sold a company for millions, or, I don't know, a Picasso or something.
Right. But this is about regular people and their everyday money.
Absolutely. And I think that's why everyone's so on edge. It's that, wait, could this actually affect me feeling?
Exactly. So let's do a quick explainer just in case anyone out there is thinking, hold on, what exactly is capital gains tax again? No judgment. Tax law can feel like a whole other language sometimes.
It really can. But at its core, capital gains tax is pretty simple. It's a tax on the profit you make when you sell something that's gone up in value since you bought it. So say you bought, I don't know, a rare comic book a few years back for 20 quid, and now, because it's a collector's item, you sell it for 200 pounds, that 180-pound profit, that's where capital gains tax comes in.
Okay, that makes sense. But the article we're diving into today describes the potential impact of these rumored changes as eye-watering. So what are people actually worried about?
Well, the big question marks right now are around two main things: the rate of capital gains tax that's going up, or that tax-free allowance shrinking, that amount of profit you can make before you actually have to pay any tax. Either way, people are worried about ending up with a much bigger tax bill.
And all this speculation, it's not coming out of nowhere, right? There's a bigger economic picture here, isn't there?
Exactly. I mean, one of the main reasons the government might be considering these options is to generate more revenue. More money coming in means more money to fund, well, everything else, really. Public services, managing the deficit, all of it.
So it's not as simple as the government wants to take more of our money. There's a potential ripple effect on the whole UK economy at play here.
100%. And that's why understanding capital gains tax, it isn't just about personal finance. It's about understanding how all these financial levers impact the whole system.
That's a really interesting point. It makes you think about all the potential consequences of these rumored changes, both for individuals like you and me and the economy as a whole. So let's say the rate does increase. Can you give us some concrete examples of how that would actually play out? Say for someone selling a property versus someone cashing in some stocks. Yeah, let's get into the nitty-gritty. Give us a real-world scenario here. What could this actually look like for people if these rumors become reality?
Okay, so let's say we've got Sarah, and she's selling a rental property, right? Made a 50,000-pound profit. If the capital gains tax rate goes up, let's say from 20% to 25%, suddenly she's paying an extra 2,500 pounds in tax.
Okay, so not exactly small change we're talking about.
Exactly. Now picture David. He's been dabbling in the stock market, maybe wants to cash out a 15,000-pound gain. Now, if that tax-free allowance shrinks, more of his profit is exposed to the taxman, which means, well, a bigger tax bill for him, even if the rate itself stays the same.
So the takeaway here is that this isn't just about the super wealthy selling off their second yacht. This could actually impact anyone who's, built up assets over time.
Precisely. And here's where it gets even more interesting. These potential changes, they're not just about, getting more money for the government coffers. They actually send signals to the market, too.
What do you mean signals? What kind of signals?
Well, think about it. If capital gains tax becomes less favorable, people might be less inclined to invest in certain areas, right? Like that rental property might not seem as appealing, or maybe those stocks don't look so hot anymore if you think you're going to be hit with a huge tax bill when you sell.
Okay, so it's like this domino effect. Individual decisions then have the potential to impact bigger things like the housing market or even the stock market as a whole.
Exactly. But there's always another side to the coin, right? I mean, some people would argue that a higher capital gains tax would actually encourage longer-term investment strategies.
Interesting. How so?
Because if you're not looking to make a quick profit by selling something off quickly, you're more likely to hold on to it for the long haul.
Makes sense. So it's all a balancing act then, isn't it? Trying to generate revenue, but also not wanting to stifle investment or kind of like mess with the natural flow of the market too much.
Exactly. It's all connected. And that's why it's so important to understand all sides of the issue.
You mentioned there are arguments for and against these potential changes.
Yeah.
What have you heard? What are the most common arguments on both sides?
Well, on one hand, you have those who are all for higher capital gains tax. They tend to see it as a fairness thing, taxing profits from investments at a similar rate to income from, a regular job. It's about equity for them. Plus, they point to the potential for, let's be honest, a lot of revenue that could be used to bolster those essential public services we all rely on.
Right, and what about the other side of the argument?
Well, the folks who aren't so keen on increasing capital gains tax, they often worry it will discourage investment, particularly in those riskier ventures that, can lead to innovation and economic growth. They're worried about unintended consequences like a slowdown in the housing market or even less entrepreneurial activity.
It's pretty fascinating how one single tax policy can generate such a complex web of arguments. We're talking economics, philosophy,
It
even.
really highlights how interconnected everything is.
Speaking of interconnected, while we're laser focused on capital gains tax today, I did notice the article also mentioned that it's not the only area causing pre-budget anxiety. Seems there are whispers about potential inheritance tax changes as well.
Yeah, there's definitely a lot of uncertainty swirling around right now. It's only natural for people to be a bit on edge, wondering what else is coming down the pipeline.
Absolutely, especially when you consider how directly these policies can impact our everyday lives, our financial well-being, all of that. So, with all this speculation going on, what's your advice to our listeners? How do you stay informed about all this without getting totally overwhelmed by it all? It is tricky, isn't it? Trying to keep a level head when it feels like everything's up in the air.
Yeah.
So much to consider. For our listeners who are in that boat, how do you recommend they, well, stay informed about the budget without getting lost in all the noise?
It is tough, you're right. I mean, it's so easy to get sucked into those 24/7 news cycles and all that speculation, but honestly, stick to reliable sources. That's key. Like the official government websites, gov.uk is always a good one for updates straight from the source. And then, of course, you've got your reputable financial publications. They're usually pretty good at cutting through the hype.
That makes sense.
And of course, if you've got concerns about your own personal situation, that's when talking to a financial advisor can be super helpful. They can give you tailored advice.
Right, right. It's like stay informed, but don't let yourself spiral.
Exactly.
So I guess the big takeaway here, even though this whole pre-budget period can feel a bit unsettling, the more we understand these potential changes, especially something as impactful as capital gains tax, well, the more empowered we are to make, good decisions about our money.
Absolutely. It's all about preparation, not panic.
Couldn't agree more. It really makes you think, though. If you were the chancellor, right, facing all these different factors, what would be your guiding principles when it came to making those tax decisions? Something to ponder, wouldn't you say? Because ultimately, these decisions, they affect us all. Until next time, then stay informed, stay curious, and keep diving deep.